$19 billion was wiped out of crypto in the largest liquidation event in history. And the problem with this whole situation is because so many people are using leverage, which you shouldn't do. But Astor, Hyperliquid, these are all apparently the meta perp dexes. Everyone's obsessed with them. The casino always wins. And I cannot stress this enough. Liquidations, they're a result of margin leverage trading. And it's dangerous. And it's no better than gambling. If you're holding spot, like a lot of people in PulseChain, yes, you're wrecked. Yes, the prices are down. But look at the reaction of coins that aren't exposed on all these centralized exchanges that didn't have leverage trading associated with them versus a coin like even Ethereum. Wicks down to like $3,500. And it's not fun, it's not good, but it's a brutal reminder that trading, day trading, and taking out leverage, you're basically borrowing money that's not yours. And you're taking that to the casino to go try to ape 5x or 10x long, or even 100x. And it's terrible. Like the whole crypto market apparently was caught with their pants down on this one, and it sucks to see people losing money. But it's pure degenerate behavior. This is not what crypto is all about. Crypto is not about trying to get rich quick by doing nothing and adding no value and not making the pie bigger. Leverage trading doesn't even involve trading the spot price. Like what you're doing when you're doing leverage trading is you're putting up collateral, like Bitcoin, for example, and then you're basically taking out a mini loan to go buy another coin on paper. It's not even the real spot coin. It's usually a futures contract, and people trading and doing longs and shorts on leverage, on derivative exchanges, on Deribit, BitMEX, whatever, Binance, they're not actually even helping the price. They're not helping anybody at all. They're not even helping themselves. They're just trying to take each other's money in this virtual casino game that was created like parallel to the real crypto ecosystem that we're all trying to pump here. So all the believers and the long-term holders in conviction plays, you guys know my picks are PulseChain, Hex and PulseX, all this good stuff. Why did PulseChain only have a 4% down reaction, whereas everything else got wrecked? Well, it turns out a lot of crypto is propped up by a house of cards, and a lot of people are trading this magic made-up internet money, which, look, crypto's already magic made-up internet money. Why do you have to go and get more imaginary and more made up? And so you have a lot of charts looking like this. This is Atom, this is Cosmos, and look, this one wicked down to almost zero. A coin only does this if the people trading it are almost entirely in leverage pools. When there's no spot market for a cryptocurrency, or when maybe only 5% of the total liquidity is in spot, and the other 95 is in hyperinflated house of cards leverage platforms. Like this is from Binance. This is what you get. You get scam wicks down. Everybody gets rinsed out. People are contemplating suicide. It's terrible. It's not good for your mental health. It's not good for your wallet. Smart men go broke in 3 ways. Ladies liquor leverage. Like that was the richest guy in the world who said that. Maybe he knows what he's talking about. So it's just sad. You know, it's sad to see because people think that leverage trading is what crypto is. They're afraid to believe in something. They're afraid to have a conviction and hold something long term and buy and hold and grow the pie and play the wealth creation game, which is adoption and getting people to use your cryptocurrency ecosystem. The more the merrier. You know, Metcalfe's law, the network effect, Reed's law, the networks of networks. These are the things that amplify value, not trading in some little walled garden where a couple of C-suite guys at Binance or Deribit are taking all of your money and leaving you guys broke with nothing to even believe in. Nothing to hope for because you're in the highest appreciating asset class of all time. And yet, apparently it's not highly appreciating enough and you got to go take 10x leverage long on some random meme coin. So it's degeneracy on top of degeneracy. You know, meme coins, at least you're buying spot. With meme coins, at least you're buying an actual coin and holding it and then selling it. With a lot of these leverage platforms, you're just not. So I think this is going to be a wake-up call to a lot of crypto. But by no means is the cycle over and by no means is crypto over. All right, this is really just a big scam wick. And if we zoom out, I'm going to show you guys how it's actually not as bad as people are saying. I could see Ethereum back over 4K by the end of next week, maybe even sooner. This is crypto, okay? You chose the most volatile asset. But I want to really stress this point, okay? PulseChain doesn't have any scam wicks like this because it's not traded on leverage platforms. All of its liquidity is on-chain verifiable. And it's actually very low liquidity with PulseChain. You can look on-chain. That's where all the liquidity is. It's not hidden. And it's not in some funny money, walled garden derivative platform that doesn't even affect the price. Like when people buy longs and shorts, they're not pushing the price up and down. Well, maybe they are in a derivative way, but not directly. You know, that's kind of why they're called derivatives. And look, who's winning on this, guys? The lizard people. You're giving all your money right back to the lizard people. Hey, let's set up a perp dex meta to get all the meme coin millionaires leverage trading before rugging all the liquidity and sending everything down 50%. Now, of course, this is a joke, but in every funny joke, there's a little bit of truth. And the people pulling the strings, they want you leverage trading because, number one, the referral system is glorious. Okay, people have lifetime referrals on Bybit. So if an influencer on YouTube sends you to the meat grinder on Bybit, He's making money from all of your losses. He doesn't have to trade himself. And he probably does trade because he's a degenerate too, but he makes money and he profits from your pain, which is why on my channel, I don't talk about this. If you really want to leverage trade, you can do it on PulseChain in a decentralized way, but you probably shouldn't because you're probably not a pro trader. 99% of traders do fail. It's the sad truth. Every crypto newbie has to learn this. Even me. I wreck myself every now and then on leverage. I took out a 3x leverage long on Ethereum about 6 months ago thinking, oh, surely that'll be safe. And no, of course, Trump comes along with some Iran conflict deal and everything exploded and we had a scam wick down and my little old 3x leverage long was liquidated. Luckily, it's a very small amount, but I still remind myself regularly how stupid it is to get involved in this stuff. So here's what happened, guys. So basically Trump, some insiders figured out what Trump was going to say, and that word got down into the WLFI coin. World Liberty Finance crashed like 30% before Trump's big announcement, and his big announcement was like a huge tariff retaliation because of the rare earths restrictions that China's trying to impose on the whole world. So there's more trade war stuff going on, more tariff fears like we've been seeing this entire year, but this was one of the worst of them all because we've never seen 19 billion get liquidated. And a lot of people are getting auto deleveraged too. Here's another nefarious thing about leverage trading that people don't tell you. You can be in profit and you can still get stopped out to go pay the people that got wrecked, to go cover for the people that got wrecked. So there's people getting liquidated and then there's people in profit, and even those people get stopped out before sometimes their maximum amount of profit. They're auto deleveraged because there's no actual wealth being created here. There's just a zero-sum game of longs and shorts taken out from a common collateral pool. So it's just, I don't even want to talk about it too much, but look, Atom USD flash dumped to 0.001 on Binance. This is about as close to zero as you can get, which means most of the people trading this popular altcoin, and this is just one of many that are just a total bloodbath today, most of the people trading this aren't actually on a real spot exchange. Makes you wonder how much is actually for sale. How much real liquidity is there for a lot of this stuff? Highest appreciating asset, and yet we want more. People just want their 100x leverage on top of their coin that already has that potential to go up in spot. $19 billion wiped out. But look, Richard Hart tweeting about some Ethereum chart art. This is kind of a fractal, kind of an interesting chart he tweeted out. If you look at these circles, it's very simple. The circles get bigger, and this would put the theoretical top. Now, you can call this a price prediction for Mr. Richard Hart, the founder of PulseChain. Controversial. Just beat the SEC. Rumored to be a billionaire. Rumored to have, 160,000 ETH. I wonder whatever he might do with that. Over $500 million today. Yikes. Almost $600 million due to the price of Ethereum. And when ETH comes back, this could be well over $1 billion. The Sacrifice wallet has over double the amount of Ethereum that the US government does. And at this point in 2024, the Sacrifice wallet was seen doing buybacks and pumping up the PulseX, and Hex market into some more greed that further pumped the market. So just think about the possibilities there. That's the meta on PulseChain. And here's Richard Hart, the founder, saying that in this bubble, if this fractal plays out, we could see anywhere from 7K to 10K, maybe even $12,000 Ethereum. And this circle also does imply that the cycle lasts well into March of 2026. So look, this time is different. You could say that's cope, whatever. I don't care. This time really is different objectively due to institutional money and due to the Ethereum staking ETFs just launched. So we're on a 1-year delay from the regular Ethereum ETFs. Bitcoin never topped before the halving before. There are some things about this cycle where the volatility is getting squeezed out, and it would make sense for a slightly elongated situation to play out. So everyone's trying to predict a 4-year cycle exactly, but it's been nothing but pain for every conviction altcoin play. And it's sad, it's sad because the people sold themselves out. They went to go leverage trade, they went to go meme coin gamble casino, and it didn't have to be this way, but I guess everybody just wanted to wreck themselves. And maybe now this is a final rinsing and a final capitulation scam wick where we can actually start to recover and have a real altcoin season, unlike the fake, meme coin casino that we saw earlier. If you want to call that alt season, sure, but that was something we've never had before. Pump.fun has never existed. So while the degens are doing pump.fun and leverage trading, and they think that they're doing crypto, the institutions are scooping up all the Ethereum. They own like 10% of all the Bitcoin. They own tons of all the ETH. Look at all the ETH owned by companies. And this isn't even counting BlackRock and everybody else, right? They're scooping it up right in front of your face, and it's not a secret. But look at what the PulseChain Sacrifice wallet luckily also believes in. I'm a big investor in PulseChain. I believe in PulseX and Hex as a whole ecosystem. There's a lot of bullish stuff. Stay with me because I want to talk about a new coin that just launched on Pulse 2. But in terms of strategic alignment, in terms of people that care about the Ethereum price, the founder of PulseChain seems to care a lot about the Ethereum price, if you know what I mean. Now, why not just pump the coins, right? Why not just use all that money to go pump your own bags? Well, look, this chart says it all. timing is truly everything, and this is the pump.fun coin, okay? This is the pump chart right here. Now, pump.fun, for all the fees that they made over $1 billion in fees so far. They did $100 million of buybacks, and that's what you see in this green candle right here. But even with $100 million of buybacks into, look, an $18 million liquidity pool, the chart only pumped 2x, 2.5x, and look, 39 days later from when they started doing buybacks, you're right back down to square one. So this is what happens when you try to pump a chart into bearish negative sentiment. It just doesn't work. So all these people complaining, yes, we have to wait longer, because look what would happen if you tried to pump a project early. I think the pump.fun chart spells it out verbatim. The number one argument against just saying, oh, why don't you just pump the bags right now? Well, look what happens when you do that and the timing's not right. Okay, now there are some bullish things going on in the meantime. There was a coin that was up 50% during all this chaos, and I've got to give an honorable mention to these guys at LibertySwap.finance. I'm going to end on a good note with this coin right here, because this is something that's given me a lot of hope in the PulseChain ecosystem. LibertySwap, look, they're regularly doing about 1.5 million in annual buy pressure for Peacock only, even during the bottom of the PulseChain market. So for people that don't already know, this is like the best way to get from Ethereum or Solana or Binance Smart Chain onto PulseChain. You could be on the base network, you take your USDC from basically any network, and now Ethereum as well, and you bridge it directly into PulseChain. You could buy Pulse, you could buy Peacock, which is their meme coin. You can buy Top Hat, which is my favorite, Most Token. So look, why did I just rotate all my Most Token into Peacock token? I just did that, but I have a very good reason, because now it seems to be that Peacock has a very easy to understand use case where they're going to use all their trading fees to simply just buy their coin up and start a treasury reserve of Peacock. Very interesting, very simple to understand. And the price of Peacock, been a little glimmer of hope lately. They're up 7% today, but they literally went up about 2.5x in the past week while everything else is just melting. Total meltdown, bloodbath out there. Peacock is doing all right. So did I ape in at this green candle right here? Yes. Will it dump right after I ape in? Probably, because that's how things go. But the reason I was confident rotating now, and by the way, guys, I bought this coin at the very beginning, right back here. I wrote it up like a 4x, and then I sold it, and I missed the gigapump, and then it came all the way back down, and then it started pumping again, and I didn't even buy until like 2 days ago, right around here. Why did I buy back in? Because Peacock, as a meme coin, look, we know all meme coins, a lot of them are stupid, a lot of them don't last long, but if you're telling me that the most popular cross-chain bridge protocol that works harder than anyone else, that has an amazing intern, whoever's doing their social media, those guys are working hard, they're memeing hard, and they're building a protocol that people are using. So the more popular this platform gets, look, they take a 0.3 very, very tiny protocol fee. Well, those protocol fees apparently are generating over $1 million in annual buy pressure. And what if just a fraction of those fees was always going to buying Peacock? So they just enabled that treasury buyback mechanism. I think it was 2 or 3 days ago. So when I found out about this, and I had to have a little heart to heart with myself and say, look, do I want to hold this Most token that does nothing, or do I want to hold this Peacock token that, these guys are probably going to pump? Now, of course, it's a degen play. You got to trust that they're going to keep buying their own treasury. But as far as a meme coin goes, a utility that I like is when people buy the meme coin. So the interesting thing about Peacock is that it's kind of an unofficial referral system coin. When you think about it, kind of like PulseX is like an unofficial referral system, right? Because if you tell people about PulseChain and they start trading on PulseX, that increases the buy and burn of the PulseX token, right? So we're all financially incentivized to get people onto PulseChain regardless of what they want to buy. That's the cool thing about PLSX, because there's a buy and burn. We've got over 1 trillion coins burned. 7% of the PulseX supply is gone off the table. It's been very good for the narrative, and it's a very simple utility, elegant design mechanism in this PulseX coin. And if something similar is happening to Peacock, basically this means that the more people that you tell about LibertySwap token or LibertySwap.finance, the bridge, again, it doesn't matter what coin they bridge into with. They could be bridging into Pulse, they could be bridging into by Hex, or even just Ethereum. As long as they're using LibertySwap, LibertySwap's generating fees, and those fees are pumping your Peacock token. So it's a very interesting, kind of fair way to distribute all the gains, all the wealth generated by the protocol. And I've never seen anything quite like this, where they just, pump their own coin. Now, could they go rogue one day? Could they turn evil and just dump it all? Yes, of course. So there's a little bit of trust involved here. That's why it's a degen meme coin play for me, in addition to my core coins, my long-term Hex, Pulse, and PulseX. Just wanted to give a quick shout out to the LibertySwap team, doing a good job. And LibertySwap.finance, link below if you want to use that to get into PulseChain. It is the best way to do so. But there it is, guys. I'm just very impressed with what I've seen from the LibertySwap team. They're out here supporting other protocols. They're out here supporting, Top Hat. By the way, the #1 Top Hat pair is Peacock. with 167 in bonded liquidity, which is why Top Hat also had a couple of green days as of late due to this Peacock pairing. Very, very nice. So if you're a bag holder on Top Hat, congratulations. Maybe you get to go up for the ride with Peacock as well. So these two meme coins, Peacock, Top Hat, the dynamic duo right here. We've also got bots running in the LPX strategies, which I'm going to make another video about. You can go to lpx.plusx.app and start making yields on your Top Hat by supporting the price. And we've got volume bots coming, and it's bonded to Peacock. I mean, Top Hat has this other crazy concept where, like, what if you just don't rug the coin? Crazy thought. Crazy thought. But I really like, again, what I'm seeing from Liberty Swap here. Playing nice with other guys like Zero Trust Protocol, all these other random coins. But this Peacock token buyback thing is what's got me the most bullish. Because if Liberty Swap is successful and they use their fees to buy the Peacock token, you know, it's not that hard to understand. The token will be successful. And the token only has, what, 200K of liquidity, 100K on the buy side? Meaning if $1 million in fees is generated to buy this, that would 10x the liquidity, which would 100x the price. Now, there's going to be sellers, of course. It's not that simple. But there is some hopeful optimism. And there are people that are actually just buying and holding spot, PulseChain, Hex, and PulseX because they understand that men go broke in three ways. Ladies, liquor, leverage, guys. The richest man in the world talks about ladies, liquor, and leverage and how they're not good. And PulseChain doesn't really have availability on these terrible leverage trading platforms. So really be careful out there. Maybe you got burned a little bit. I've been burned plenty of times on leverage trading, so I feel you. I understand where you're coming from, but use this as a wake-up call to study the long-term conviction plays. It's a believer cycle. The believers are going to get rewarded. The long-term thinkers. The founder of PulseChain, for example, is trying to spell it out. In my opinion, he's trying to just spell it out as obviously as he can. You know, read between the lines, or if you don't want to, maybe you'll like buying it up 10x higher. And hey, keep leverage trading because apparently that's going so well for everybody. But this is not what crypto is. Crypto doesn't have to be this. You can end the pain. You can choose a community. You can choose a team and a cycle and something to believe in long term. Something where you own the actual asset. And leverage trading, again, you're not actually, a long and a short doesn't involve owning anything. You have a loan against your collateral that gets taken from you the minute the price goes against you in any much smaller way. So just be comfy in spot. That's what the meme comes from, guys. Comfy in spot. I'm heavily, bull-tardedly, violently long on PulseChain. Irresponsibly long on Hex and PulseX. Got me a little bag of Peacock and Top Hat on the side. Okay, fun little meme coin games over in PulseChain. Creative stuff. Plenty of other cool meme coins going on. And look, if you got to be a degenerate, meme coins are something where you actually buy the coin and hold it, and you actually own the coin. Leverage is just imaginary, fake. And people are talking about ending their lives. You know, like, this is not a good situation. And this is the kind of thing that happens with leverage trading. You're not producing anything. You're not getting more people using crypto. You're getting more people to buy a little collateral and then give it all away to a bank and take out a loan to do incredibly risky stuff that they probably shouldn't be doing. And yes, I get sucked into it every now and then. And so does everybody. So don't beat yourself up if you lost a little bit of money. But everybody I know in crypto has gotten burned several times and continues to get burned, just to remind you what the real point was. Because a lot of people have clearly lost the plot. The plot was to develop a parallel financial system away from the banking sector, not to give your money right back to the same centralized middlemen that crypto was invented to get rid of. The point of crypto is to hold your own private keys and hold your own assets and reinvent the banking system, decentralize borrowing, lending, decentralize all the stuff that banks do. Yet people just want to go rushing back for the quick gains to try to turn their $100 into $1 million by going like 100x leverage long on some silly altcoin. So maybe this was the final nail in the coffin. Maybe we've had to repent for our sins and repent for our degeneracy. And now that the last of all the leverage traders have been completely destroyed and obliterated and sacrificed, just maybe, now we're ready to actually go back up and have that mythical alt season that everyone's talking about. 4-year cycle, guys. I know you want to think the cycle's over. The cycle's not over. It's different now. A lot of people obsessing over this 4-year cycle thing are like OG Bitcoin guys, or they're people that have never been through a full cycle before. Me having been through 2 and on my 3rd. Like, this is something else. We're witnessing something different. We're witnessing maximum extraction when the slimy billionaire BlackRock tentacles are trying to get their grips around crypto and push retail to be more and more degenerate. When you can opt out, you can pull yourself up and get out of the trenches and join something that's actually worth believing in long term. I like PulseChain. I like PulseX. I like Hex a lot too. Make sure you like, subscribe, share the video, leave a comment, and if you want to talk to me one-on-one, if you've got some questions, troubleshooting, technical support, or if you want to talk strategy with the whole group, go subscribe to me over on Twitter. Just go to my channel at CryptoCoffee369 on X. Click that subscribe button, and you will have my full attention over there if you need me. See you guys in the next one.